Well, my friends, it's Brooks O'Hearn, and I am breaking down the August 2021 Denver real estate market stats. So, if you guys have been paying attention, over on my Facebook page earlier this week, I said that there were three market statistics that I was paying the most attention to, as it was going to give us an idea of where we were headed and what were some of the most important stats to watch over the July month. So, again, the August 2021 report is of the July 2021 statistics. So let's break this down. Before we get into the updated stats, the three stats that I wanted to pay closest attention to and that I mentioned earlier this week on Facebook were: one, the active number of properties on the market. All right, obviously inventory is low. So number two is the average price. How does that look? Obviously, we've had a ton of months with the average price in Denver just skyrocketing. And then number three was the percent of list price versus sold price. This is going to tell us how the market is reacting to prices that realtors and sellers are putting out. So I'm going to pull up the screen here and let's take a look at the Denver Metro Association of Realtors market report. So as we dive in here, like I said, the first thing we're taking a look at is this first number up top, and that is the the total number of listings available in the Denver metro area. Now, this over on the left-hand side, you'll see this covers 11 counties around the Denver metro area and some of the foothills. So we've got an increase of 29% of active listings from the last month, which is June of 2021. So June to July, we rose almost 30% in active listings at the end of the month, which is great news. Let's compare that to year over year last July. Even though we were in the middle of the pandemic, we are down almost 40%. So we're headed in the right direction. We're not even close to where we were a year ago, and don't get me started on where we are compared to 2019. So closed properties down 12%. That's a good sign, I'd say. It's part of the nature of the beast. If there's fewer homes, you can't close as many. But that just means there's a little bit less activity. So closed price, the average closed price did dip just a little bit, down 2.5% from the previous month in June. However, still up 16%. This is really good news for homeowners, as they're still sitting on a lot of great equity that they've built up over the last few years and market appreciation. So don't want to dog on that now. Detached and attached, if you want, I'm going to attach this a link to this PDF here in the comments below. So if you want to take a deeper look, this is just kind of the things that I'm looking at. So that will be there for you guys. Now, let's move over to some of the market insights. This one really caught my eye here, which is, this one caught my eye right here. Of the 10 top costly estates, Colorado is not on the list. Now, this does not just take into account real estate, it takes into account goods, services, and different things, basically just cost of living. And obviously, as you can see, Hawaii, California, New York, obviously those states have been hit the hardest with inflation and things like that through COVID, so that's as to be expected. A couple things over here. In mortgage news, 2% of builders nationally were offering incentives in May, and that number jumped to 7% in June. I'm looking right here, guys. And that shows homeowners are having a difficult time, home buyers are having a difficult time working with home builders. Builders obviously were hit with the lumber cost increases at the beginning of the year, and then they're slowly dripping out their inventory so they don't get overextended, and they're protecting their profits. If you drip the profits, if you drip the properties and new home sites out a little bit slower, of course you can add more to your bottom line as this market continues to appreciate. So those are some things to take a look at. Another one, if you want to compare what this looks like on average number of active listings for July is 16,000. Guys, we had barely over 4,000. Okay, barely over 4,000 at month's end. We should have 16,000. So don't think that anywhere this foreclosure or eviction or any flood of properties is going to kill the market, because we have so much further to go. We could take a look at some of the information here. For detached single family, this is the colors. Yellow are active listings, blue is new listings, green is pendings, and this purple color is closed. So as you can see, we've got some really good activity with new listings over here on the right hand side with June and July. Let's hope that continues. All right, let's hope that continues. Now we'll keep going down. Median closed price. I don't like the median. I like to look at the averages. All right, median is just a different calculation. For those of you that don't remember that lesson from elementary school math, the June was 725,000. Now it's down to just under 7,000. Excuse me, just under 700,000. 699. All right, so it's moving in the right direction as far as average price. We need to kind of cool this average price off a little bit. The close price, all right, you guys can see the map here. Now let's go average days in the MLS. We know it's short. We know properties don't last very long right now. New listings, you can kind of see the up and down trend. This is seasonal average, or seasonal is very common in Denver's market to see very low numbers of listings in November, December, January, even a little bit into February, and then they start to really kick back up, but still low numbers. Now, this is insane. If you want to take a look back at the last 13 years, guys, the left side of this graph is January of 08. The right side is July of 21. The yellow line is the number of active listings at the end of the month, and the blue line is the number of listings that were closed in that month. So not a huge deviation from the average closed listings in 13 years, a huge deviation in the active listings at the end of the month. Guys, this is insane when you look back. We, at the peak in April of 08, April or May of 08, we had over 26,000 listings on the market. And then we are now down to almost 4,000. So obviously it's better than it was in January, which was under 2,000 active listings. But guys, this is obviously still low inventory, and this is why we're seeing the things we're seeing. So now we look at a data snapshot real quick, and active listings, we just touched on this at the top of the video, but again, this shows you this graph is July of 21 versus June of 21 versus July of 20, so prior month and 1 year ago. So you can see that there's 30% more active listings, but we're still down 40% from a year ago. Now, the one statistic that I have not gotten to in terms of what I was paying the closest attention to over the course of this report is the close price versus list price, 104%. So that means housing prices, listings are closing on average 4.1% above list price. Now, this is really good news for homeowners, because as you're looking to sell your house, basically your realtor commission is almost free. The buyer's agent makes generally 3%. The listing agent generally makes 3%. So if you're making an extra 4%, you're paying for the listing agent and a little bit of that buyer's agent already. So that's really good news. The prior month was 105%, and then a year ago we were just a shade under 100%. So I would like to see this number get a little bit closer to 100% so that we can get to more of a balanced market. Obviously, with more supply, that is going to happen, and obviously that will kind of let people breathe a little bit. So as we come back over here, the takeaway from all of these statistics is, number one, we have still a record low inventory. Number two, we are trending in the right direction. We're seeing some positive signs. And what I'm telling all of my buyers, investors, anybody that I'm discussing this with, I think the general consensus is not that the market is necessarily shifting. We're seeing some good changes, but all we're getting is a little bit of breathing room, and I think it's very, very much welcome after the insanity that was this first part of 2021, and everybody loves some breathing room. So this is just a quick breakdown, guys. There's more information. I promised you that I would link this in the comments below, and I will have this PDF linked for you guys so you can look at the entire Denver market report. And this is breaking down for you what is all of these infographics that you're seeing on Facebook and social media. What do they mean? What do the stats look like? And what do they mean for you and your pocket, whether you're buying, selling, or simply just a homeowner and you're watching? Or some of you guys might be just renting right now. You're not owning a property yet, and you're wondering, when can you get off the sidelines and jump in? Well, here are some statistics to give you a look at what the market looks like and give you an idea maybe when you could jump in. So, guys, if you're not already following, I'm dropping real estate news and real estate information for investors, realtors, and the general public on this channel all the time. Please go ahead and hit that subscribe button down below. I would love it if you would also share this video out with your friends and family, or even with your real estate offices. Let me know what you guys think. Talk to you soon.